Hi everyone, we all know that when investing in loan that the biggest cost is the risk cost, meaning the amount of money what you will be losing in case of borrower goes default. And this is very important to understand the risk cost before you investing in loans and making sure that the risk cost is not exceeding the offered returns. And to do so you need several things. One is so-called RORAC calculator or returns or risk adjusted capital calculator. Which you can easily find on the crowdfunding, and which basically shows you the estimated returns minus the estimated risk costs, which allows you to make assumption about the real potential returns. Other is the data, and data about the historical performance of the loans with a similar risk grade, which will allow you to make predictions about loan performance in the future. And today we will calculate RORAC for the project posted on the platform called October, which in my opinion does the best job in presenting statistics. So let's have a look on statistics what they are presenting. So if you can see here, they are presenting like general statistics about the performance, how much money was lent, number of projects, and stuff like that, but which is like usual thing what platforms are presenting, but they also show performance results, which is basically based on analyzed data. So basically what does it show? It shows that average interest rate offered in particular year, and also they're showing the identified risk cost, how much investor lost money or didn't get money for those loans. And here you can see the actual returns, meaning this is the most transparent way how to show the information to the investors so they understand the real returns what they might make. So let's start to calculate RORAC for the project. We have chosen this project, and to start calculate we need the basic data like interest rate 8.3. So the next thing what we will need, this is the probability of default, and usually the probability of default should be represented by the rating, but most of the platforms when they represent rating they just showing that the financial situation is good, the management is average, the stuff, market is like this and that and that. But you cannot put words in the formula. You need basically the conclusion, like of all of these metrics. And the conclusion basically is that what is the probability that this borrower will go default. And also October does a great job here, and they show information for each ratings. So we have a rating B and default rate 15.8% for this rate. What does it mean? It means that historically 15% of the borrowers with the rating B went default. And if the economical situation remains the same, we can make an assumption that the probability of default will be the same. So we are putting this number in the probability of default. But the default itself, it doesn't mean you are losing money, because the loan can be secured with some assets. And let's have a look like does this loan has any securities, and we can see here that it's basically secured with a corporate guarantee and the business pledge. The corporate guarantee, it says that it's issued with a public investment bank and it secures up to 60% of the loan. So meaning we are pretty sure that we will be getting 60% of the loan or 120,000. But it's not covering the full loan, so we are looking at what does it really mean, the business pledge. Business pledge is a pledge on movable assets, inventory, equipment, accounts receivables, and so on. So let's check this one, and for this we need to look in the financials, and we can see that fixed assets are 344,000 and current assets is 166. So basically we're getting around 500,000. But of course, if you will try to sell those assets, you will not be getting 100% of loan book value. Usually, I don't know, you can estimate that you will be getting something around 20% or something like that. And if we are getting to 20% of 500,000, it means we are getting 100,000 euros, which basically means that our loan will be fully covered and we are not losing any money. But of course, just for the sake of calculation, let's assume we are not getting 20%, we are getting 10%. And in this case, we will be getting 170,000 and we will be losing 30,000. And which means that we will have a loss given default 15%. And it means that the actual rate what we will be getting is 5.9%. And if we are looking on the statistics, this is pretty much so that on average your actual returns are 2.5% lower than the offered rate. And I mean, this is the best way how the platform should present the data, because it provides transparent information to the investors about the real returns. Because there might be the cases when the platforms are offering you 10 or even 15%, but due to the defaults you will be end up losing 15% in the risk cost or even more. So we as investors has a right to demand this information from the platforms. And please help other investors to find the platforms who do the great job in providing this information. Please go to the Crowd for Platform rating list and leave a rating and review for the platforms. It will help us all to make crowd investing much easier and transparent. So it's all for now. Have a great day and successful investing. Bye.